Good afternoon, everyone. Welcome to Banao Bharat's Trading for Living Thursday Expiry Live session. Somewhat quiet day today. Let us quickly look into the charts. This is the chart of Nifty. Opens at around 18,590. From there on goes up to 18,660 or 659 is the day's high on futures. Currently trading at around 18,630. So the opening move is kind of like trying to do a pullback, which is being continued from yesterday's low of 18,566. So today it opens at around 18,590, which happens to be the higher low, and some amount of pullback, but it is not able to cross yesterday's high, and currently it is in kind of sideways or no trade zone. So this is with respect to the Nifty chart. After having opened at 18,590, goes up to 18,650 and now somewhere in the middle at 18,630. For now, there is not much trade on this expiry day in Nifty. The next available trade is only at around 18,700 or 740 on the higher side, or if Nifty comes down to 18,560, which happens to be yesterday's low, then we can see some support at those levels. So this is with respect to the Nifty chart. Bank Nifty also is in some kind of a similar setup. Yesterday it made a low of 43,986. From there on, one good pullback attempt also has happened, and with big volumes towards the end. Some say it is because of Kotak Bank's MSCI reallocation. Whatever is the case, there was some good pullback towards the end. Today it is not able to continue with the pullback. It is opened at around 44,100, definitely above yesterday's low. So once again it has made a lower low like Nifty, and it has traveled up to 44,275. On an expiry day, the opening range of 175 points on Bank Nifty is kind of muted. Generally on the expiry day, or even otherwise on other days also, the opening range, the way market opens at 9:15 and then the way it travels in the first half an hour or 1 hour, or the first opening move, it might sometimes last more than 2 hours also, will be around 300 to 400 points. You can see here yesterday the opening move was, it opened at around 44,425, went all the way up to 43,986, which means about 500 points. But generally we see on any given day the opening move will be around 300 to 400 points, and then it starts stabilizing and it starts kind of spend few candles around or within that range, and then it takes a next course of action. That is how generally the markets move. The opening move will be fierce and severe, either on the upside or on the downside, or sometimes it gets choppy immediately within first few candles, and you can see one red candle, one green candle, or any such formations. Whatever is the case, I have generally seen opening moves are about 300 to 400 points in Bank Nifty, and coming to Nifty about 80 to 100 points on Nifty, which we see in the opening range. So beyond the opening range is where we generally trade until unless it is a breakout. If it is a breakout of the existing range, then we take a call whether the breakout to be played on the higher side or on the lower side. But generally when market opens within the range, then we wait for the opening range to get formed, and once the opening range is trying to breach, then we take a call at that level whether it should be a long trade or on the short trade. So that is the kind of strategies that we have designed and coded in our trend following systems. For now there is no much of trade available in the opening range of the market today, either in Nifty or in Bank Nifty. Generally expiry sessions, we all know it will be kind of volatile, especially at least 2-3 candles post lunch is where we see sudden spikes or sudden fall and we see many of the stop losses being taken out. Generally the smart players, they allow people to take some opinion and take some positions, and they see which side the common man or the small hands or small fish are taking the positions. And generally what the big players do is within one or two candles they do the counter movement, and we see many of the small players being hit by the stop loss. Once again after that stop loss is taken out, you see markets going in the same direction. Well, these are all part of the game, so we cannot too much crib about it. While entering itself, we should know these kind of pitfalls. Small hands will always be at slight disadvantage, but then we can also, if we have enough knowledge and enough experience, enough skills, we can navigate all of these pitfalls, and definitely still small investors or small retail traders can make money in the market on a more frequent basis. If not on every day, at least frequently, and in the long run they can have a positive alpha just by trading in the stock markets. Only thing is they should know the mechanics of trading, and if they do that, then definitely there is some chance. If they blindly play the market, then obviously no matter how much ever away you put your stop losses, those stop losses also will get taken out. You will not know when to exit, when to book your profits, when to hold on to your losses, or when to take out the losses and go home and come back with a fresh perspective the next day. So these are all the things that you need to learn as part of the trader's activities. Being a trader, you need to have certain traits, certain skills, certain experience, some amount of knowledge and information. Along with that, when all of these things are combined with sufficient experience, you will get a wisdom to know what to do, when to do, how to do, and more importantly what not to do, when not to do, and when to stay away from the markets. Today being expiry, I don't see anything much happening yet in the market. Maybe all the action or the drama is reserved for post lunch sessions. On the expiry chart, if you see, I use 2 hours chart for the expiry. Well, last week the expiry had closed at around 43,680. From there on, this week it moved higher, went and made a high of 44,525 on the opening day itself on Monday, and after that it has been slightly coming down, made a low of 43,986 yesterday, and the opening for this week, if you see, the opening has been around 43,658. that was on Friday, and Monday is where we saw the big gap up. After that, kind of muted day. Yesterday was slightly on the lower side, but towards the end we could see the lows, whatever was taken out, was again conquered, and both Nifty as well as Bank Nifty both have closed above the lows that they cut. Today one more muted day is going on. Probably it will take some more time for people to assess the existing positions and then do some trades based on that. Nifty shows some kind of a buying signal now, revised at 18,659. One signal at 18,659, and what was a buy at 18,742 is now becoming a sell at that level, because we are trying to get some breakout at earlier level of 8,659 itself. But still, on the whole, if you see the Nifty, after 2 days of sideways movement and after yesterday's fall, in spite of the pullback, the Nifty is in kind of downtrend, so you will face resistance at the higher levels. This is Nifty on the weekly chart. Last week it closed at 18,324, the last Thursday. This week, beginning on Friday, it opens at around 18,419. From there on, Friday itself there were signs of good up move, and Monday gap up. It makes a high of 18,742. After that, currently trading at 18,616. Not much downfall from the highs. So this week, whoever played the early session on Friday itself, there was a breakout at 18,479. they have seen the rally up to 18,742. Still, even if they have not cut their positions, it is still trading almost about 200 points from the breakout level of 18,479. So this is with respect to the Nifty's weekly chart. Bank Nifty also on the intraday time frame has to come with certain currently trading at 44,210. Looks like one big price candle is happening, but there is no supporting volume. Nifty has slightly improved in terms of volume while falling. This is one big red candle. Is it trying to come close to the morning's low of 18,590? This candle, the low is around 18,596. So will it try to breach 18,590 and go further down is what we need to wait and watch. So this is where Nifty and Bank Nifty is today. On the charts, if you see this expiry as of now looks kind of slow movement today, kind of muted. Definitely there is going to be some action this week. If you see, overall players are there on the long side. Friday itself players have taken the position on the long. Monday there was a big gap up. People are sitting comfortably on good long positions. If they have exited, they would have booked some very good profit for this weekly expiry. If they have not booked, then probably they are still in the money, they are in the profit. The breakout was at around 18,479, and after seeing the breakout we have seen the levels of 18,740. Still, even though it is 100 points below, most of the expiry players are in profit in this week. So they will, hopefully they will not give away all the profits. Of course there will be this gap up is taken some of the bears by surprise, so they have not, you can see there was no follow up buying, which also means follow up buying will come when, in two cases, when the bulls think this breakout will continue, they will jump onto the breakout and they will buy it, or bears, they will think this is a wrong bet that they have played and they have to square off their wrong bet, so they will be in a hurry to do the short covering. Looks like in this case the Monday's breakout, we have not seen both. We have not seen bulls aggressively buying the breakout, or we have not seen bears panicking and aggressively covering their shorts. Both have not happened. So this is kind of a dilemma for both. The bulls, should they to enter at these levels? For bears, they are one step on the front foot, hoping they will be able to pull the market down from these levels. Ultimately whoever will win, but we, in between the players, the small players, the retail traders, we need to know where is our stop loss. Take any position, either long or short, that doesn't really matter. What matters is, after having taken a position, taken a view, taken a trade, know your stop loss beforehand and do not hesitate to cut your stop loss at any time. So it is very, very important we adhere to our stop losses, no matter what is your view or opinion on whichever side the markets might move in the coming days. Well, as of now it is around 12:15. There is not much action going on in the market. Market is looking flat to the neutral, but then this is a kind of lull before the storm. There will be some price action happening anytime. Be prepared for that, and whenever that price action happens, you should know what you will do. I always tell the traders, you should know what you will do when the market does something. What does the market do? We don't know what the markets will do, but we should know what we will do when the market does something. Once we know what we will do when the market does something, then playing the game becomes easier. If we think we will play at the high of the day when it is cut, then that is our strategy. Okay, when the day's high is cut, we play it. Whether it will go further up or not, we don't know, but we know If it doesn't go up and if it starts coming down from there, we know where to exit and where to take our losses and move ahead with our next trade. So with that objective, when you trade, life becomes simpler, life becomes more clear. Then you will be able to see the charts more clearly and make inference out of those candles or charts, patterns or indicators or whatever. So I wouldn't take much time today. Today's expiry is looking little calm as of now, but it may not be closing this way. Anyway, we will see how it goes. We will once again meet tomorrow. Until then, have a good trading day. If you are liking the content on this channel, do subscribe to the channel and come back daily for the live session. Let us once again meet tomorrow with a fresh perspective on the market. Until then, Om Swasti.